Hello, and nice to see you all here in our webinar. So we are here today to discuss the economic on the UK manufacturing production, which is due in about 10 minutes. Alongside to that, we have also information on inflation report hearings coming out. And so do we have a release on the industrial production too. So there might be quite a reaction from the market side too. Getting back to manufacturing production data, this reading measures the change in the total inflation adjusted value of output produced by manufacturers. And this is where manufacturing makes around 80% of total industrial production and tends to dominate the impact. Let us first have a look at the historical performance of this reading. And I should definitely also point out that the graph I'm going to put on whiteboard, the graph that I'm going to put on the board is going to be on a yearly basis. See from this graph right here, yes, we do see that throughout the last 2 years, the reading has been rather volatile and fluctuating from month to month. However, the reading has been rebounding starting with August 2013, losing its momentum in the month of December, as it was less than forecast at 1.5%, as momentum eased at the end of the year. Now we should also have a quick glance at the Bloomberg survey of economists to see what we can expect from our today's release. So let me just put the necessary charts on the whiteboard. So according to the summary of Bloomberg, you see that on yearly the reading is supposed to be at 3% today, up from 1.5% the last month. If we look at the top 10 forecast, then we do see that yes, the top analysts are positive on the reading, with the high estimate at 3.4% and the lowest at 3%. Right. I should also mention that if we look at monthly basis, then has been estimated and stay at 0.2%. Well, all in all, we might conclude that the analysts are rather optimistic on the manufacturing production, but let us see what we can members think. And for that reason, I am going to put a snapshot on the whiteboard from the fundamental analysis contest. And surprisingly, our community members are in different opinion than the market analysts are, as 57% of them have bearish impact on the Great Britain pound and USD currency pair. But however, there are still 43% of traders who voted with this bullish impact of the pairs, and we see a very good bullish comment from Dr. T.B. as well. So basically, he also mentions the fact that there are 3 fundamental releases at the hour: inflation report, industrial production, and manufacturing production. He does think that all the releases will positively impact the Great Britain pound USD currency. But talking about market impact, positive and negative, and market reaction, I'd like to give it to Thomas, who is going then to continue.
It's my turn. Hi everyone, I hope you're having. So what I will be presenting, I'll be talking about positive impact. Put everything right neatly. So what I'll present, I will be doing presentation on the Euro, Great Britain pound, and there are a few reasons for that. Well, first of all, of course, it's being one of the main. Secondly, the mildly bearish, so 55% of traders expect depreciation of the pair, and euro is also being sold in 62% of all of the cases. So in case the data comes out better than expected, we should see euro losing ground against the Great Britain pound and the pair trailing lower. Besides that, market sentiment of other market participants like Wanda or Saxo Bank and community members of daily FX indicate strongly, well, moderately to very strong bearish moves, 63 to 84% of the traders between the three being short on the pair as well. Now, the trading strategy itself, maybe let's zoom out a little bit to make it a little bit more visible. Until something like 5 minutes ago, the daily high was at 0.83404. That is the orange line you're seeing right now on the whiteboard. So not on the white over here. So peaks above it actually would be very beneficial to our price. Now stop loss in such case could be put at the for now I put at the monthly R1 at 0.834. We take profit at the daily R1 0.833039 right over here. So however, if it remains straight 83, 36, 37 now, so I guess it would be very good to put the stop loss actually at the new daily high at 0.8341 right over here. That being said, I guess let's move to and look what our technicals actually are. We do clear indication from the indicate trends, and we're getting mixed signals from them. What comes into support and let's say into help for trading strategies, the fact that stochastic indicator and 10-minute and 30-minute chart actually point at depreciation of the, meaning that it indicates that the pair has been oversold. So I get that for us. So about 2 minutes till the release of the data. I guess at the same time it would be, if I recall correctly, my mention maybe already this as well. However, we will see other daily other releases of data related to the United Kingdom at this point as well. Right, so what is this? 1 minute 20, right? I guess I mentioned everything was there. If we take a look into other actually current pairs, or for the results might not be as positive as anticipated, I guess we could look into the vice versa situation and put the take profit at the monthly R1 at stop loss, maybe even at the 200 or effectively 200 minutes some average, which is at the moment is located at 0.83332.1 right over here, right? So the release of the data that of course will be having will be seeing industrial production data released as well, and administration report hearings as well. Therefore, the results might be slightly, let's say, longer lasting, and we might see a much greater volatility. So, getting some 1%, and manufacturing production on monthly basis came out slightly better than expected. So I guess due to this mixed data that will be pretty much today, we should expect trade somewhere in the lines of 0.83 and 0.835 pretty much trade at the moment, right? I guess we could expect some additional volatility in the nearest future when the inflation report hearings will start, but I don't really think that, well, it's clear from manufacturing.
Okay, thanks a lot, Tom. It is better than expected and was at 0.53%, so good impact. And good to us, and we do wish you a great rest of the day. And yes, if you have any comments with regards to on the chat section. And don't forget to join our web GMT, where we will be joined by a professor from the European University Cyprus, who is going to then discuss the roadmap in removing capital and its implications for Cyprus and the euro currency. So that's a great opportunity. Don't miss that. See you later.